And the next question was about the lending landscape for commercial real estate. What is it looking like and how can businesses prepare? The lending landscape for commercial real estate has grown more complex with higher interest rates, stricter underwriting standards, and increased scrutiny from lenders. So in this environment, businesses looking to purchase buildings need to be especially well prepared. Strong financials, a clear business plan, and a good understanding of their cash flow potential is important for securing financing. It could also be beneficial for buyers to also build relationships with multiple lenders, including traditional banks, credit unions, and private capital sources, to compare terms and improve their chances of approval.
So spot on, Diana. I mean, obviously the number one most important thing in a tougher lending environment like now is strength of financials, right? The stronger financials and the more stability you can show, not just to lenders, but also to landlords for that matter, the better terms you're gonna get. It's a common misconception that if a tenant or buyer shows really strong financials, then the landlord's going to try and charge higher rates, or the bank is going to charge higher rates. In fact, the opposite is true. When a landlord or a lender sees less risk, they can reduce rental rates, they can increase tenant improvements, and then they can, on the lending side, they can lower rental rates and get more aggressive terms. But Diana is spot on when she talks about trying to have multiple sources, having multiple offers to look through is going to be incredibly beneficial. And so we always have the traditional line, right? Your banker, going to the bank that you do business with. But there are a lot of other options, a lot of other banks. And I like to think that Tenant Advisory Group, with our 25 years of experience in the market, we have vetted and worked with so many different sources of capital that it's really beneficial to lean on us for some introductions and have more conversations and therefore get more offers, which means you can be back in the driver's seat and getting these banks and lending sources to compete for your business.